as we get into the adulting phase of our lives, we often hear the term insurance and that we should be insured. What exactly does this mean, and is it the same for everyone? There are so many different terms thrown around that one can become very confused, like myself. We've also heard of times when persons who were quote and unquote insured, but when disaster strikes, they find out that they had either the wrong or inadequate coverage. As the locals say, what a calamity. This does not have to be the case if we are appropriately informed about insurance. This morning we are joined by Austin Julius, the General Manager of Nagico Insurance, who will help.
Correct that, Advantage Capital Management.
Oh,
Agent of Nagico.
The Advantage Capital Agent of Nagico Insurance, I stand corrected, who will help shed light on some of these issues. Good morning, Mr. Julius. Welcome to Good Morning SKN.
Good morning. I'm happy to be here.
How are you this morning?
I'm doing excellent.
Okay, so before I start throwing the bullets, I need to make sure that you're okay. So in a nutshell, can you tell us and the viewers what is insurance?
Okay. I normally define insurance as the socio-economic and financial arrangement in which the financial impact of a loss is transferred from one person to several persons, and on a larger scale, from a group of persons to a greater or larger group of persons. That's it in a nutshell.
Well, I'm confused in that nutshell. So is there any way you can make it a bit simpler for someone else that might be as confused as I am?
Okay. Sometimes I break it down to partner hand. Everybody can identify with partner hand. And I mean, we know that the payment goes around in a circle. The difference between insurance and a partner hand is that the issue of fortuity, which is the uncertainty of a loss, right, is with insurance. With a partner hand, you know exactly when you will be paid. You know exactly what amount you'll be paid. And you know, with insurance, that is not the case. You know that you are covered. You don't know what the amount of the loss will be, and you don't know when that loss will occur. So the uncertainty inside it, which we call fortuity, is very important in that regard. So insurance really deals with the financial impact. Everybody faces the risk of losing something. And when you lose something, the question is, do you have money to pay? Right? That fund comes from the pool, the money. So when you contribute to that pool by way of a premium, that pool now takes care of the loss. So where everybody will contribute to that pool, when there is an unfortunate situation happening, then that pool comes into effect to pay for the losses of one.
Okay, understood now.
All right, so based on what you've just said, is there anyone, let me not phrase it that way, who should be insured?
Good question. As I said, everybody faces the risk of loss, and that is the risk of losing something. You face the risk of losing your car, if you have a car. You face the risk of losing your health, right? Someone who has a house faces the risk of losing their house. Listen, a child faces the risk of losing their parent, who is a bread giver, right? So everyone needs insurance. And of course, we have to look at the legality of children insuring themselves and so forth. That can happen because of certain aspect of the law. But we have adults who can insure, who can make sure that, those children are covered. So everybody needs insurance.
Wow.
Is that a tough sell sometimes? Is that tough to sell to people sometimes?
You know, sometimes, because there's a skepticism with regard to insurance. And I like to say it like this. The principles of insurance are unadulterated, but the practice of insurance can become contaminated by the defects of man. And so, because men are defective, they draw that and they put that into the insurance system. And so people have a problem with how they are treated and the defects of men. But the pure principles of insurance are for the betterment of society.
With that thought, I would buy, but then I've been burnt at least by 3 firms where they've closed down. Well, I'm yet, and the others are yet to hear from them. So how do you persuade somebody like that to buy insurance again?
Well, when one has difficulty in an insurance transaction and insurance situation, it is always good to speak to someone who is knowledgeable, because they can dissect that issue and go down to the core of what is wrong. And as I said, there are times when persons who are involved in insurance, they are not honest, right? Or they are not upfront with some things. They approach you, and their approach is based on what they can get out of it, not what they can offer you and what is best for you.
All right, so let's delve a little bit into the various types of insurances that there are, insurance that there are. So what would the average person typically need?
Let's say vehicle insurance, right? By law, it is required that vehicles be insured. Right? Whether or not you want to insure those vehicles, you have to insure those vehicles. That's the minimum requirement of the law, right? Property insurance. It is not mandated by law for you to insure your property, but based on requirements, financial institution requirements, you are compelled to insure a property. If you go for a loan, if you go for a mortgage, and so forth, right? Life insurance also. Also, that's a requirement that you have life insurance, because in order for you to get a loan from a financial institution, they would ask for you to have life insurance in the event of death, right? And then medical insurance. We get sick many times in our lifetime, and so that should be a desire of everyone to have life insurance. So, in a nutshell, those are 4 types of insurance. And within those types, I can go and break down into more insurance.
Okay, great, because this is actually my next question here. When we talk of property insurance, I'm wondering if there is any sort of loophole. For instance, say that I have property insurance, but I'm not necessarily covered for fire, or I'm not covered for flood, and we live in the Caribbean. Is there such a thing as hurricane insurance?
Well, property insurance, and within the group of property insurance, there is what we call homeowners insurance, right? And that homeowners insurance, it's a multi-peril type of insurance that you have, which includes windstorm or hurricane insurance. So yes, you can have hurricane insurance. There are some caveats with regard to hurricane insurance. One, you have to make sure that your property is adequately insured. And so what does that mean? That means you have to make sure that the sum insured is equivalent or the same as your value, right? The law, however, is on the side of the resident's owner, because the law says in the Insurance Act of 2009, Section 178, says that an individual who owns a house cannot be penalized for underinsurance once they are insured within 85% of their true value. So there is some room that you have to insure your property at a reduced value and still not be penalized by underinsurance. But you have to be within 85% of that value.
That's good to know.
Yes, that is very important.
So if I came to the insurance firm, I have to say I want the multi-peril insurance.
You can say homeowners insurance.
And that homeowner still covers the fire and the flood, hurricane that Jamie just mentioned.
Yeah, I can.
I'm just making it clear.
Fire, riot and strike, earthquake, explosion, burst pipe, malicious damage, windstorm, flood, aircraft or vehicle impact, theft, volcano. Within the fire peril, there are other sub-perils. There's smoke damage, water damage, right? Lightning strike. Within the windstorm peril, there is cyclone, hurricane, storm, and so forth.
Okay.
Right? So you're adequately covered in terms of the perils that policy covers.
Okay, great. So these are not options that we'd have to check the box on effectively. We'll just go and ask for homeowners insurance.
Most policies, homeowners policies in the market, do not give you an option.
Okay.
You are just automatically covered
for everything.
However, if you want to extract or say, well, I don't want fire or I don't want windstorm because I have maybe a concrete structure there, the insurance the underwriters can make some adjustments for you. but hardly do anyone come to say, you know, that they right, to extract. Yes.
Because you really never know, as you said before.
Yeah,
Right,
exactly.
right. And hurricane is our most significant peril here in St. Kitts.
Yes. So, Mr. Julius, you spoke to children. You said there's a law where a child cannot insure his or herself. How do the parents go about insuring a child? Can we put them on our policies?
Yes, they can go on your policy. They can go on a medical policy as your dependent.
Okay.
And you can also, as a parent, you can insure your child also on life insurance, on life insurance policy.
So they start on your life insurance policy, or can you get them their own life insurance?
You can get them their own life insurance policy. Right. However, you will be the policy payer. Policy. Yeah.
Of course, the adulting part.
Right.
Okay. Mr. Julius, we normally are concerned about the fine print, and I was also telling you that we give the money willingly every month, but once something happens, it's hard for us to get back the funds, and you were also explaining a deductible. So can you speak to those 3 points?
Yes. We normally hear that there are fine prints in insurance, and of course, there are legitimate concerns that persons have. Once you're involved in insurance, someone approaches you, you should take time to explain some of the terms, the contentious terms of the policy, so that later on when there's a loss, you don't have, things just popping up and you're saying, oh, you know, the policy had in this. You know, how come you didn't know about it? You should have read the policy. You know, those are the talk you get. But if you're in insurance long enough, you will know exactly where the trouble areas are, and you can discuss that with your client in the first instance. For example, we have a policy deductible that is attached to a homeowner's policy or attached to a vehicle policy. That deductible is the first amount of any loss that the policyholder is responsible for. So the policyholder must share in that loss up to a certain amount, and then the insurance kicks in, right? Let's look at, homeowners insurance. There is a 2% as a standard deductible that is attached to your policy, 2% of the sum insured, right? For catastrophe perils. Catastrophe perils are perils that are likely to cause a catastrophe. Hurricane, earthquake, volcano. Those are the 3 cat perils that we have. For the other perils, there is a deductible of $1,500. Right? So, going into the policy, that should be explained.
So that $1,500, I pay that by myself, or I pay at least 13 and you give me the 2?
No, normally, once your loss exceeds that, it is just deducted from let's say, for instance, there is a fire loss to the tune of $100,000, right? You make a claim, the insurance company believes and see the merit of your claim, $100,000. They will pay you $98,500.
Oh, so you pay the
right.
That
in the event now of a hurricane loss to the same tune of $100,000, they take out 2% of that, $2,000, and they pay you the $98,000.
Understood.
Right.
All right. Curious to know, content insurance. What is it?
Content insurance is the insurance you have covering your household contents, right? So if you desire content insurance, you would have to, you would be required to list those contents and assign a value to those contents, and you say to your insurance underwriter, I'm interested in having content insurance, and they will facilitate the process and incorporate that content insurance inside your homeowner's insurance. Sometimes it's called renter's insurance, in which case someone does not own a property, but they're renting a property. They can just go and insure the contents of that property. And of course, the structure of the policy is still the same, covering those contents in terms of the perils they are covered.
So it's not automatically included in homeownership?
It's not automatically included in homeowners. It has yet. You have to express the desire and be guided accordingly as to what you can do and the requirements to insure those. Some persons might think that it's automatically covered, but no, it's not automatically covered.
All right, let's speak to depreciation of items. How do you account for that? Is it automatic? What do we do?
Depreciation. The principle of depreciation is very, very, very important, because if you have a policy of indemnity, it covers what we call the actual cash value of loss, right? And what is that actual cash value? This is it. this is your item that you're insuring, right? What the insurance seeks to do at the time of a loss is to restore you to whatever financial loss you had. How to determine the value, this value, right? I will look at the replacement costs of this.
Okay.
So I might have bought this 5 years ago for $100, but 5 years after, it is not $100, right? It is about maybe $55 now. So when there is loss, the insurance company will seek now to compensate you for $55 because you have to eliminate what we call betterment in insurance. You don't want someone to be better off when they claim, right? They have to receive an equitable settlement for their loss.